the implications, how it works, and so on. We're going to hear from them in a minute. This webinar is part of a series of webinars that the Client Bonds Initiative is hosting in April and May around the work of the Technical Expert Group. Every Thursday at 1500 CEST, there's a taxonomy session, and that will be going through right through till June. Yes, there's that much to speak about in the taxonomy. Tomorrow, you can hear about land use if you want to join. We will also be doing a workshop on benchmarks in a couple of weeks with Andreas Hoppner and others. We will be doing a workshop on new commission policy that's in formulation, and so on, all work related to the work of the Technical Expert Group on other days. Thank you again for joining us today. We're in the middle of a crisis. What we're going through now is likely to lead to a significant recession. The measures we're taking are not unrelated to what we're talking about here. The European taxonomy can be seen as a framework for the future. In our stimulus, which needs to be a green stimulus as we build back better, as Nancy Sage at the European Investment Bank is fond of saying, we need to make sure that we build the right way. That's the taxonomy. But we also need to expand our understanding of resilience, as we discuss extensively in the taxonomy, to systems resilience, health resilience, social resilience. It's going to be a century of climate change thoughts. Our climate scientists have been telling us to expect pandemics, pathogens, crossover species when there is environmental degradation, to expect fires, floods, storms, droughts, and so on. And so this is a good time to reflect on how we can ensure our societies are appropriately resilient to cope with this. Deeper redundancy in the health system, social protection that cuts in when crises do hit, stimulus funds that are on tap to bring in when we reach certain benchmarks. These are examples of resilience measures. As we grow, as we stimulate growth to get out of this recession, we need to be thinking about where the money's going that also achieves resilience for the future as well as addressing short-term problems. The Green Bond Standard, which is a reporting and transparency framework for the green bond market and can be used and it will be used for social bonds, sustainability bonds, also provides a useful reporting template and transparency template for sovereign bond issuance around stimulus. We want to know where our money's going. We want to know how it's being used, and we'd like reporting against it. And in that context, we're talking today about the Green Bond Standard, not just in relation to the existing green bond market. Now, however, let's get into the weeds of the thing. What I'd like to do is to ask Aila Aho from Nordea to kick us off, but to introduce first Tanguy and Eila. Tanguy Claquin from Crédit Agricole CIB is perhaps the world's #1 green bond banker, or I'd probably say now green bond and social bond and sustainability bond banker, and has played a critical role in driving this market in Europe and around the world. Eila Kreivi, well, Eila is head of leading investor relations at the EIB, and the EIB was the first issuer ever in this particular thematic market with its climate awareness bonds in 2008. So this is the foundation stone represented here by Eila. And Eila, who has been the rapporteur, has been sustainability manager and various other roles for Nordea for many years now, and now has a very high-level title, which as an advisor to Nordea. But more importantly for me and for us, she's been leading the work of the Green Bond Standard ever since we began more than 18 months ago. Eila, can you start us off? What have we got here? What are the highlights of the proposal?
Thank you, Sean, for that very good introduction and setting the scene for this. And thank you, everybody, for joining in this very beautiful spring day. The Green Bond Standard was first presented by our working group last summer in our report, which still is actually valid. We did also publish a usability guide now in March in connection of the other taxonomy and other related publications by the TEG. So those are the places to go for details. And if there are questions during this webinar, please do not hesitate to ask those. So the standard that we are proposing is a voluntary one. So we recommend to the European Commission that they should establish the standard at some point. And Sean, please remind us that we capture with a future timeline during this webinar.
Yes.
The recommendations are that anyone who chooses to use the standard, investor or issuer, should rely and follow the necessary steps. So the use of a standard is voluntary, but if you commit to use it, then you have to follow all the steps. So align the use of proceeds with the taxonomy. So it is a use of proceeds standard like most of the green bonds market today. The taxonomy criteria requires that you contribute substantially to one of the 6 environmental objectives, do no significant harm to the other objectives, comply with the minimum safeguards, which were a little bit updated in the latest regulation draft, and then comply with the relevant technical screening criteria for each activity that you decide to include in your use of proceeds. So that is the essence of what is green. The next step, which I would say is has a bit more emphasis in our standard than it has in the current market, is the green bond framework. You would have to, as an issuer, to explain what your objectives are and how these bonds really relate to that strategy and to the overall environmental targets. So have a more comprehensive story behind these issuance. I'm sure investors would appreciate that. It's also an opportunity for both public and private side issuers to really explain their wider goals, what they are striving in their strategy. And the reporting is mandatory, both the allocation.
That's quite an important change, isn't it? Because at the moment in the global market, it's voluntary, and in some markets like the US, we don't see that much that much mandatory. Sorry, that much independent review. In Europe, this will now be mandatory. This is significant.
Well, we thought that since the whole point of the green bonds is to be transparent and combine the financing that you are doing to the real economy outcomes. So what is your money doing in the real world? What impact does it have on social, but particularly on environmental goals, as we are talking about green bonds now? So without this reporting, you are kind of missing this, or it is easy to miss this connection. So it is really important, as you say. So both the allocation, where you intend to use the money, where did you actually use it, and what was the outcome measured in the environmental metrics. And then an even more important, or actually the real change that we introduced, was that verifiers would need to be accredited or registered, or supervised. Right. And then these verifiers would need to verify your reporting. So you have a full chain of transparency, and that was really the leading guide for us when putting this together. It's built on market practice, but I think I will stop here.
And I think that's an important point, that actually in Europe, everyone gets an independent review. So this is not a significant change if that's becoming mandatory. Tanguy, is that a reasonable comment?
Yeah, I think it's a reasonable comment. I think that's a big change, as you say, Sean. There are a number of elements that were in the Green Bond Principle and that were recommended in the Green Bond Principle, and that have been moved to a different status in the EU Green Bond Standard of being mandatory. The reason for that is because when we have started to work on that project of the EU Green Bond Standard, we have observed what was happening in the European market, which is a bit different from what you see on a global basis. And the idea and also the mandate that was given to us by the Commission was also to base our work on what was happening in the European market and what were best practices in the European market, which was a fair starting point. Well, maybe stepping back a little bit also, what I want to underline as maybe an introduction also is why we've done that and why the Commission have asked us to work on the Green Bond Standard. On the taxonomy, the definition of what is green is like a constant debate in the market, and I think it was interesting that a jurisdiction and a body like the Commission established what for Europe and for a region like Europe is a definition of what is green. But for a green bond standard, we could argue that actually the market was already relying on a number of documents like the Green Bond Principle, which are recognized on a global basis and which provide a very good guidelines and very good standard for the market. And there are others. I mean, the Climate Bond Initiative has produced a number of interesting documents in that respect too. And so in fact, and the market is also working fine. Without the EU GBS, I think we know how to document the green bond, and we know what investors expect and what observers expect. So what I want to underline as an introduction is that one of the reasons why the Commission asked us to work on this green bond standard is also the assumption that this would help the market to go further. The idea is that one of the reasons why some issuers are not tapping the market, for instance, in the corporate world, or also beyond corporate, some sovereigns, there are some players which are a bit sitting on the fence, hesitating to enter the market, sometimes, and more often than we think, by lack of a clear official definition, not only of what is green, but how to document it, what is really needed. Why do all issuers in Europe do a second party opinion? Why do they all do impact reporting if it's not needed? So providing clarity on that aspect, and there are a number of other aspects on which we'll come back. We have not really made any revolution, but we have just clarified some elements which are more difficult to clarify in the backdrop of the Green Bond Principle, because the Green Bond Principle have a global objective. Here is with, just for Europe, can we clarify some elements that are just market practices in Europe to provide more guide and make it official, like EU GBS, to provide more guidance and a more solid and recognized framework for issuers so that they can enter this market with more certainty on the execution, because providing certainty on the execution is something that the market needs. Also, I would believe that it can help growing the market further. So that's why, I mean, before we maybe come back later in the discussion on what we have changed compared to the Green Bond Principle, which may be a good way maybe to describe it, I think it was important to insist on the reason why we've done that and the reason why the Commission asked us to do it.
Thank you, Tanguy. Very useful comments. And the key point I think you say is that this isn't actually different to market practice substantially. It's builds on market practice now, which was always the intent with this. Aila, you've been a leader of market practice, the EIB, from day one, and you're fond of dobbing in your colleague, as we would say, Aldo Romani, to say he was the person who worked on the very first deal as the father of the market. How do you see this particular initiative fitting in the development of the market, and also relating to EIB's practice? You're still one of the largest, if not the largest issuer in the non-sovereign market. And you may be competing in France as well, I'm not sure. What's your perspective on this, and what should people know from your perspective?
Well, from our perspective and from the market perspective, I think this, as both Eila and Tanguy, I think, said, that this builds on existing market practice. And we all thought that was quite important, because the voluntary steps that the markets had already taken were quite big ones. As Tanguy said, why would you do all this, although it's not obligatory, mandatory? So in that sense, I think that was very important that we did build on existing market practice. What does it mean for the market? To me, the one question that I have heard, and I have said even this so many times that I forget how many times it was, but the one big hot potato in this market has been for years that, well, what is green and what is really green? In the Green Bond Principles, I chaired it for 3 years, and the one questions that we discussed over and over again, well, are we going to define what is green? No, we can't, because we are bankers, we are finance people. Who is going to define it? We don't know. Somebody who has the technical background has to do that. And to me, now this Green Bond Standard, the most prominent feature of it is linking it to the EU taxonomy. And this taxonomy, to me, was the missing piece. You may not like it what it is not complete yet, far from it, plenty to come, but this was really the missing part, the missing link, if you like. So now it's on the way of being established, and that, I think, is yes, it's a demanding taxonomy. First of all, some of the thresholds can be quite high. Yes, but there is a reason for that. That's because we don't have that many decades left anymore. It's quite demanding also in terms of transparency and all these do no significant harm and minimum safeguards, but it's also because it has to be. What's the point otherwise? If everything goes, then nothing goes. And to me, this is really the remarkable thing about it. And we'll all have to adapt. So from EIB's point of view, although we have been pioneers of the green bond market, we have issued plenty. We have been one sort of the pillars of the taxonomy group alongside with the Climate Bonds Initiative and many others. But it doesn't mean that this is just water under the bridge for us, and we just write things differently in the brochure and that's it. We also have to adapt. And even at the sort of lending level, we a few months ago we took the decision that we will quit financing fossil fuel.
An extraordinary moment in European history, right?
Yeah, but it absolutely was. And I have to say that I was in Brussels on that day, and I have never been pestered as much by anybody about the EIB board decision. Nobody ever paid any interest whatsoever before. But that shows that we took that decision in November. So we also are adapting things. Still in November, it was possible to do fossil fuel projects, so which is definitely not taxonomy aligned. So we are all on a learning curve, EIB included.
Indeed. I mean, I'm going to say for those of us concerned about the future for our children, that was a day to be proud Europeans when that board decision went through.
Yes.
Now, and it's interesting that Nancy Sage has talked about in your team how the EIB is now also referencing the taxonomy in terms of the implementation of its climate bank mission. So there's a lot happening there. We're not going to go into the taxonomy in this session because there is a 12 webinar series you can get for the overview and looking into each area like transport and electricity. So please do look up www.climatebonds.net webinars to see those, and you can download the podcast. If you've got questions, by the way, we have a Q&A button on your screen. You should be able to find it on the Zoom screen, and you can type in questions and we'll seek to address it. We've had a few coming up already. I'm going to just ask Eila about one, verifier supervision. How's this going to work under the European Green Bond Standard? I mean, we've talked about a registration of verifications. Is it more than that? How's this going to work?
Yeah.
Second opinion providers is what I mean, sorry.
Yeah, we call them verifiers. We had the reviewers, verifiers, second opinion providers. We decided to call them verifiers more or less throughout, or reviewers. But the common market practice today maybe is to talk about second party opinion providers. We mean the same thing. The thing is that the verifiers currently do not have any supervision. And if you think of the fairly heavy regulation, at least what many market participants say, on credit rating agencies, on banks, on different kind of entities working on this value chain, and especially in relation to this increasing importance of the environmental information and this non-financial information. So it's kind of strange that this crucial part of verification supervised or governed in any way. Mm-hmm. So we decided that this would be important because that is really also the real add-on to the current market practice. It has a couple of requirements that we outlined in quite a lot of detail already previous summer in the 2019 report. Basically, first, governance for basic compliance rules, conflict of interest practices and things like that. And then also requirement of having the relevant expertise and relevant experts on the environmental matters, on the EU law, and to be registered or present in Europe to be able to do these verifications. The taxonomy, although it is not directly always talking about EU legislation, many of the requirements, especially on the do no significant harm, actually can be fulfilled by meeting the local legislation. So it's an important element from the technical aspect. Coming back to your real question about what does this mean, supervision or registration. now Commission will need to decide how they establish the standard, and part of that decision is how they organize this supervision that they proposed would be taken by ESMA as a central organization in Europe.
ESMA is for people overseas, ESMA is a regulator, right?
It is a regulator, yes, and a central regulator for Europeans. The alternative would be national authorities in each country. 27, quite a sort of high risk on having different rules per country, which is not in line with the harmonization, what we are all seeking for to mainstream the sustainable finance. So if a real supervision will be created, which is still a possibility, it will take some time. And because any legislative processes in Europe take minimum 2 years, typically longer, and changing the ESMA scope of work would be such a change. So it would take some time.
So time is an interesting question here. What is the timeline for this thing?
Well, what we are currently envisaging, COVID is of course putting a lot of pressure on Commission and everybody on keep these initiatives, sustainability related actions afloat. But anyway, the timeline thinking is that Commission would have their consultation now on this revised second step Sustainable Finance Action Plan. It does have some questions about Green Bond Standard. I'm afraid we will have to conduct another survey because of some rules, after which we can conclude the way forward and then propose something in connection of the publishing the revised next level sustainable plan, which could mean getting finally to the answer that you asked him.
Yes.
Is that during first quarter next year, or by that time we would know, or sometime September, maybe perhaps October now, we would know how the proposal by the Commission would look like. Then TEG and some members relevant to this activity are standing by and positively looking at the alternative of creating a voluntary registration scheme for the verifiers until the ultimate process, whatever it will be created and put in place by Commission. Okay. So this voluntary, so the voluntary interim registration would set certain rules that the verifiers would voluntarily then commit to follow, and then the register would keep a public list of those who are really committed to those. So it's not the same as supervision, but it's a kind of first step towards that. And we thought that, I'm still thinking that it's important to have this step because we do not want the market to stop.
But that could actually start soon, couldn't it?
Well, it could be quite soon, actually. So if you think of the complexity of the taxonomy and companies looking at reporting against and finding the real assets, this is now perfect time to start looking at the how you could find the real assets from your own economic activities. What could be aligned with the taxonomy? How would you build the story? How would you build the framework? And kind of prepare for that. And I'm convinced that the verifiers will be there.
Tanguy, this market is going anyway, right? So I mean, we've seen a couple of good bonds. I mean, apart from a disastrous March because of the crisis, you yourself have done a couple of spectacular deals this month. And, as you know, I'm a great admirer of the Iberdrola issuance, 11.5 times oversubscribed. But I also want to point out there was a bond by Crédit in the UK in February, I think it was, which was specifically said to be aligned with the taxonomy, as well as meeting the green bond principles. So stuff's happening. This is all going on. When this voluntary guideline comes in, what's going to happen to the rest of the market? What are you thinking in Europe? Is everyone going to use the green bond standard? Are some people going to use different standards or just reference the green bond principles? What's your hunch, or maybe your hope?
Yeah, good. Thanks for the question. And I think I will also take the opportunity to answer one of the questions that is on the chat line. You can ask question on the chat. So in fact, the EU Green Bond Standard will not be mandatory. I have used this term before, but clearly the standard itself will not be mandatory. It will be a voluntary standard. But in fact, if you would like the bond to benefit from the EU GBS label, then of course there are a number of mandatory elements. And one of them is what Eila has just discussed, which is being verified by a certified entity. But it will, in theory, stay possible, or remain possible to issue a green bond without labeling it EU GBS, even if you're a European issuer or even if you're a European investor. Of course, so to answer your, so it's not a mandatory standard, at least in the way the proposition is drafted right now, because what we have not described either is that for the moment, the EU GBS is a proposition by the technical expert group. So we are very, very good experts, of course, but maybe the Commission may take another decision. And let's see what they do, in fact. And it may take time for them to see how they will handle that. I think they have a relatively good trust in what we have put on the table, and it doesn't seem that they want to revamp that. But for the moment, it's not established. So what do we expect, just to come back to your point, or what do we foresee as you, in terms of the development of this market? In fact, if there is a standard available in the market, and if this standard is providing some further certainty element, some another level of quality, I would say, and is received and is seen at that, the bet is that it will attract some issuer on a voluntary basis. And sure, you're well positioned to do that. I mean, it is also what has happened with the CBI standard to some extent. It was a voluntary standard. It is a standard that was more demanding than doing nothing. Nevertheless, some people have used it because it provides some gold standard. And we expect that the EU GBS, because of, I mean, the level of support that it gets from Europe, will have this impact, but maybe multiplied by 100, and that people would like to be GBS compliant, even if it's voluntary. So we expect the adoption of this standard to be quick, because in this market, people want to show that they are doing transaction at the best standard. So that's a first driver. The second driver is that we expect also some public entities on the investor and on the issuer side to be to be supporting this standard and to be using it. So asking it if you're an investor, or using it as if you're an issuer. And so that would further push the adoption of the market. And of course, the situation is also that Europe is currently still the area where we have the most diverse, dynamic, deep, responsible investor base. This may change. I hope it's going to be the case everywhere in the world in the near future. But for the moment, if you're marketing a green bond, it's clearly in Europe that you could see so many green investors. We expect all those green investors in Europe to ask for the EU GBS, because they will have to report on the amount of holding that they have in this EU GBS. And so, in fact, if you have to report about something, that's the first incentive to increase your holdings. And so we expect also issuer outside Europe, to think about following these standards, because it will give access to those investors. It will not give access, because the access will already be there, but it will facilitate this access. So that's the way we think, we hope.
So it's a kind of normative role in terms of thinking globally about this.
Exactly. Right. And in fact, it's true that the level of detail that has been produced by the TEG, be it on the taxonomy or on the GBS, is going beyond what exists elsewhere in the market, which means that any entity that would like to create another level will have to position itself against either this taxonomy or this green bond standard. And maybe later I will maybe let Eila comment on that, but we'd like to comment about the key differences or what we have changed compared to the green bond principle at some point.
Eila, do you want to dive in at this point on that?
Yeah, what has changed the green bond principles? Well, the first one I mentioned already, that clearly the green bond principle lists categories which are considered as a good use of proceeds for the green bonds, without having any more definitions. And this is clearly now very different with the taxonomy. The verification or external reviews, as it's called in the GBP, has been kind of voluntary. Now this becomes mandatory with the use of GBS, but that Eila already talked about quite in detail. So that is definitely one feature. The rest, in terms of the framework and the reporting, is actually fairly similar. There's just a little bit step up in terms of what is required. So as Eila said at the beginning, this is a voluntary standard, but if you choose to use it, then you have to do certain steps. And the framework that we have designed or proposed is a bit more, goes into more details, but also more into the narrative of the issue. Why am I doing this? How am I aligned with the Paris trajectory? What is my overall sustainable strategy, and so on and so forth. So we are proposing to tell a bit more about the background of the issue, so that to show that this is not just a one-off gimmick marketing exercise of some.
That's quite an important development, isn't it?
Yeah, yes, I think that is because it cannot be that. Otherwise, we are not getting anywhere. And we talked about it in length, as many topics in this group, and we decided that we wanted to give this background or encourage or ask issuers actually to tell what they do in this respect in the overall strategy, not only with this particular bond. And then reporting, we went a little bit further. So we said that the allocation reporting must be at least once sort of verified, and it's annual or at the end of the at the end of the allocations. And then the impact reporting, which we did not really set any form at because it's still very much an evolving space, but we said we recommend it strongly. We did not ask that to be verified because it's also not very easy for verifiers, for many of them to verify, and those impact reports can be so diverse in form and shape and in detail that we didn't want to take that step yet. But those, I think,
with the post-issuance reporting, do you have to get that done by verification? The annual reporting is, or the end of
once, sort of.
Once. Okay, good. So that is also a significant rule to introduce into the market and make clear. So these are important developments that to boost confidence in the whole green standard.
So the structure is very similar, or almost identical to the GBP. It's just that in certain regards it takes one or two steps further.
We've had a couple of questions about OPEX and activities. I mean, of course, when the taxonomy was first developed, it was focused on activities, although we ended up saying assets and activities. How does this? Is there a change here that people need to be aware of? I mean, the green bonds market has focused more on assets, I suppose. Tanguy, perhaps you can just give us your thoughts on this. Are there changes people should be aware of? Is there an opening of ideas?
In the interest of time, I will not give you my thoughts about that. I will give you what there is in the standards. We have spent hours.
This is a Tanguy speciality.
We have spent days on this, literally. And it's true that it's a question that is very interesting for corporates. And we did not have many, I mean, we have a few corporates in the group, but just a few. And that's a question that is less interesting for financial institutions, except if you're a bond advisor, of course. So in fact, in the green bond, the green bond market has built behind the idea somehow that a green bond is allocated to assets or to projects.
Mm-hmm.
Well, I mean, it's just the idea.
Yep.
But we have seen also in the market some transactions which were earmarked to pure OPEX. And there are different types of OPEX. So some OPEX are linked to an asset because they maintain the lifetime of an asset, or because they improve the asset, or because they are linked to non-tangible assets. If you're doing research and development, for instance, somehow, I mean, you can build some intangible assets that are key for the transition.
Sorry, you said research and development.
Yeah.
That's a bit of an innovation, isn't it?
Yeah, that's an innovation, although this was mentioned in the Green Bond Principle, that research and development was already eligible. So, I mean, those were type of OPEX that I would say the market has accepted for a while. We had seen already in the market some OPEX that were related to assets, clearly, and that would qualify. And the example is heavy maintenance, for instance, linked to an existing asset, or research and development. But we had seen also transactions that were financing in really short-term assets, like purchase of material or purchase of electricity, that do not really stay on the balance sheet of the issuer, and those there was a big debate about them. There is, it's also somehow linked to the question of how you manage companies which do not have a lot of assets, but still are playing a very important role in the energy transition, and they are issuing bonds. And so, how do you create a space for those players? Because we didn't want to put a boundary. As I said initially, we were not in the view that we will go beyond market practices in Europe. So we didn't want to create artificial boundaries that would come just for our group, and we were relying on what the market was doing. We did a lot of consultation on this question because there was diversity within the group, and so we end up with this wording where there is an open door to some OPEX when they are related to improving. They are linked to a specific asset, or they are specifically mentioned in the taxonomy, which is seldom cases. So in fact, that's recognizing what I've just said, but we are also closing the door to OPEX when they are absolutely not related to a specific asset, and that's drafted like that. In that sense, we are going further than what is in the Green Bond Principle, where it's not described, because we're not going that far in the Green Bond Principle. We are also opening a door to working capital for when we can, it happens with asset-light companies that they have a large working capital. Sometimes they are fully dedicated to a green purpose. You can be a manufacturer of solar panel or some other application that are useful for the transition. A large working capital, no real assets you can allocate to. If you can demonstrate that the share of your working capital is actually used for green purposes, and that the link to the taxonomy is there very useful, then you could put that into your green bond, which is opening a door that, was not really addressed in the existing text. So I think we've gone.
So Tanguy, I want to tease out that one, which is a very interesting development. In that the Securities Commission in China has a similar provision, slightly different, where any company can allocate a percentage of proceeds raised for green bonds to working capital.
Yeah.
But here you're saying there are some caveats around the entity and the sense of being able to allocate. Can you just give us a bit more what you mean by that? How does it work? We haven't seen one of these in Europe yet. So let's say I'm a wind manufacturing company. How's this going to work? I can just say I'm allocated in working capital, but I'm a wind manufacturer, that's fine? Or is it more than that?
No. In terms of the allocation of proceeds, this could work like that, except that we have not given any shortcuts in the reporting. And so, in fact, you still need to have a framework, you still need to have a reporting, you still need to, on reporting not on the impact, because we didn't go into that, but on the allocation and on the impact. So, in fact, if you're able to demonstrate that the way you have allocated into your working capital are providing those impacts because it's linked to the activities that are listed in the taxonomy, then it works. And to some extent, we had to be consistent also because the work that you guys were doing on the taxonomy side were really based on the activities. So if we were not able to say anything about the activities, there is a mismatch between the the taxonomy and the standard. So this is what we have done. We have gone further. It's step by step the market is developing. So we've gone further than what the Green Bond Principle or the CBI or other bodies were doing. We have provided guidance which we think corresponds to what was generally accepted in the European market without breaching some of the principles that some corporates were putting on the table, and they were very clear about this. We have also clearly recognized, there's a specific wording for sovereign entities, because when we're talking about CapEx and OPEX, is really more a corporate language, but we know that sovereigns, they just have OPEX to some certain extent, very few investment, a lot of operating expenditure. We've seen that they are active in the green bond market. And we think that they need to be active in the green bond market.
Especially this year.
Yeah. Their specific role is mentioned here. And so that, again, we've gone a bit further than the market, providing guidance on those aspects. So recognizing that there are different type of players with different type of contribution. I'm jumping also some question on the
Go for it.
chat. The question of the requalification, how do we manage loans for which there is no taxonomy? And I think that's a question that we need to address because it will take time until there is a taxonomy for everything, not only on green, but also on social. And so And so clearly right now, the approach is that there will be, hopefully in the coming weeks, a text on what is the taxonomy, I mean, what are the key principles and the regulation. And so basically, if you obtain an opinion or a verification that you're in line with the key principle of the taxonomy, and there is no delegated act right now giving you the technical criteria, then there is a grandfathering. So you don't have to requalify your bond. So it would apply to all the bonds that would have followed this track. Of course, the bonds that are currently in the market will not be grandfathers all without having a specific review. Because
do you think people will want to do that? Is there demand for that?
For the requalification, you mean?
Correct.
I don't think so. Maybe,
because
I would say it won't be the majority. I mean, the bond market is such that the transition, they do mature after a few years. I think the majority of the market is shorter than 10 years. So
yeah,
I think it will come.
And the Commission's been at pains to say existing green bonds need to be recognised in the market. This is about future issuance, haven't they? So,
absolutely.
Yeah,
absolutely.
And I think that's so for everyone out there in the market, there's no suggestion here that there's a demand that people requalify. This is about how we structure it going forward. Some people might, but it's not an expectation.
And it's also why the EU GBS is made as a voluntary standard. I mean, it means that the Commission recognized that for a number of years after this has been set in the law, the two approaches will live together, and we hope that they will live fine together. There are a lot of questions about COVID and social too, and that's interesting. Is as you all four know, we had this discussion in Brussels during the last 2 days. I mean,
yep.
Virtually in Brussels in the last 2 days. And so, in fact, I think the green bond standard that we have put on the table right now, it works also pretty well for any social bond. And so for me, it will be a social bond standard just with a copy-paste approach. We don't need to develop or very few specific things. The key question will be the social taxonomy, which seems obvious in the current days because we all tend to see what is social now, but when the dust settles, I mean, when the situation...
Well, it is a potential issue. I mean, we've seen 300 COVID bonds out of China already, and some are really good, and some are a little bit dubious in their claims. But, you know, it's an emergency, and you can live with that. But it does raise the question of, should we be providing guidance? But in the meantime, the key point you're saying is the reporting, transparency provisions
Absolutely.
of the Green Bond Standard map instantly across to the sector, and we should be using them, right? Is EIB looking at bond issuance linked to the recovery at all? Is that part of your program? Given you're one of the key funders of stimulus?
Yeah, with a crisis, I think we have the two sides. We have the fire extinguishing phase, and then we have the recovery, which might be slightly different demands. We have this other product, which is the sustainability awareness bond, which actually groups all other social and environmental sectors apart from climate.
Right.
So we do have that. But I agree totally with what Tanguy was saying, that what is required in the green bond standard in the green bond market, you can very well bring that along to the social side. You don't need to wait for the standard or a taxonomy. You can already start behaving like that. And I think that the main thing is that we get now money flowing to the right direction.
Yep.
And that's that, like I said, it's a bit different in this fire extinguishing phase where certain other things are important, and the recovery phase, which should be using this BBB slogan, build back better.
So Eila, in the Scandinavian area where you're working on a day-to-day basis, I'm curious, what's the reception? Because I say this for our listeners, because Sweden is the world's #1 green bond market per capita. And frankly, the beginning of the market, because it was Swedish investors that really were the kernel of the original investor base in 2008 and 2000, not the only, but really the center. And that is now spread across Scandinavia. What's been the reaction to this on the ground? Do you see take up the green bond standard amongst the other banks in the area, and more to the point, the investors and the issuers happening quickly in that market? Because if it's going to work in Scandinavia, it's going to work everywhere.
I think there's a lot of attention both to the standard and to the taxonomy. So people are kind of past the phase when they're just trying to get used to what does it mean to be sustainable in finance. They've done their homework in that respect already. So, but now we are more into the details. What does it mean in my company? What does it mean in my activities? What kind of real estate progress and renovations are eligible and whatnot? So we're very much into details already, which is positive because it means that it's in the implementation phase. Now we have a little bit of a challenge, like the whole market has, that there's not enough assets that would meet this criteria, and the demand for sustainable assets by the investors is wider than there's assets in the market at the moment. So there's a tremendous...
There's a supply problem.
There's a supply problem.
It's a great
yes.
problem for a banker like Tanguy to have.
Oh, well, and I think it's also an opportunity for all of our societies, because there is demand for good assets. We have definitions of how good and forward-looking, future-proof assets would look like, and now it's just to get them going. It is, of course, to be realistic, it takes a bit time.
And the risk of a market where demand is so strong is you do get greenwashing, and you get things. And this is the point of the link between the taxonomy and the green bond standard, right? Because this is an attempt to ensure quality.
But also, I think the Green Bond Framework is a great tool here, because it provides a good platform for the issuer to explain what their wider aspects are. We have had some issuers who have been preparing to meet their investors with a 10 centimeter thick stack of information of public transportation and air quality and light and whatever in their fantastic buildings. And they have been so disappointed, and everybody has only been interested in the energy efficiency and climate related things, which is absolutely fine. It's good to start from there, but they are preparing to share more. And I think that's it's a positive development and sets the scene for future guidance. But getting the real economy to match the demand in the financial community, it takes a bit more time. We can be faster in our digital world. In the real world, you need to make plans and get permits and all that. But at least with the standard, and of course backed by the taxonomy, there's a good direction. So those issuers that have been a little bit hesitant that, okay, am I green enough? Do my assets qualify? They now have something tangible to look at. Some of them are still waiting to see what will be the final delegated acts to be issued by the Commission at the end of this year, and for the remaining 4 objectives at the end of next year. But I think there's also one thing that besides this overall need for additional transparency and connection between the sustainability strategy and the financing that the company is taking. So taking the treasurers into the picture, into the sustainability. The new concepts, the framework is one. It's an old concept, but it has a little bit more relevance now. And the taxonomy concept of do no significant harm, which is maybe a little bit of double-edged sword, you could say, from the point of view that it is to start with, it could be a little bit difficult for people to understand how it works, and potentially to verify it once we get really going and see that it's the same things that keep repeating from activity to activity, and same principles that you can comply with. But especially when we were talking about the social bonds, it's a good standard to think about that while you are saying that what good am I doing, it's also very important to state that where are the limits of the harmful impact that I may be having as a company or an issuer. So it's kind of creating the safe space from both sides. And that is new to our sustainability thinking. We are used to having that any company can have an ESG rating. There's always something good and maybe always something that is not perfect. So you can have a relative assessment. But now it's starting from the other angle. It's starting from what is the environmental impact and is it relevant for the purpose? Is it good enough for the purpose? And what is the transition? What is the direction of travel? So it's dynamic as well.
I mean, our ambition across the TEG has been to create understandable rules, clear rules that should make it much easier to advance this market in lockstep around the place. That's one of the theories behind it. And then support, as Tanguy was saying earlier, the impact on thinking around the world in a normative fashion and so on. So I think we're there, but of course, as Tanguy, you were saying, the taxonomy doesn't cover everything. In the Green Bond Standard, you are allowing people to make a case, even though it's not in the Green Bond Standard. You didn't finish off that point earlier. I think I cut you off. My apologies. Can you tell us a little bit more about how that'll work? If it's not in the taxonomy, you still can make a case. Have I understood correctly?
Yeah, you still can. If it's not in the taxonomy, so
Yes.
no.
Let's say shipping, for example.
I mean, I promised I would not talk too much about the taxonomy because there are specialized webinar about that. So
yes, but if it's an area not in the taxonomy, like let's say super efficient shipping, battery operated shipping.
Yeah, I mean, let's take the example of shipping right now. Shipping for the moment, there is in the 600 pages that you have written with your colleagues, Sham, there is nothing about shipping for the moment. It will come for sure.
Yes.
So it means that, right, nevertheless, so that's the future delegated act, that's the technical criteria. Still, there is a text, the directive that is defining what is the philosophy behind the taxonomy with the 6 objectives, the significant contribution, the do significant harm that Eila has already explained. If you're able to find a verifier that is accredited and that certifies that the ship that you want to finance is in line with the taxonomy, then of course you can get a second. It's not an external review that would say your green bond is in fact in line with the taxonomy by lack of existing technical criteria is compliant with the EU GBS. So of course over time, there would be technical criteria that would be verified, that would be published, and then the verification process would change. But as long as it's not published, this is the way we have conceived it.
So this is a really important point. This means that Maersk and NYK can still do green bonds that be recognized under the GBS.
Absolutely.
Okay, thank you for that. That's an important clarification. Yeah. I've had a lot of questions about that. So I hope everyone...
There is another question I wanted to
Please, go
on. I think we have also done something. I mean, in the Green Bond Standard, we have proposed for 2 types of reporting. I mean, we have really separated the 2 reporting, and I think in other existing bench text, it's not as clear that there is the allocation reporting and the impact reporting. The allocation reporting needs to be published every year until full allocation and needs to be verified.
Right.
So that's the key point. The impact reporting needs to be published once in the bond's lifetime and doesn't need to be verified because there are so many different methodologies that it's difficult to ask for a verification of the impact reporting, but the methodology has to be published. We had a long debate about that, but in looking at the time, the reason why we've done that this way is because we think that, again, even for carbon, which is probably the impact reporting for which everybody knows what we speak about, there are a number of different methodologies. Even for a same wind farm, several banks can have different methodologies. So the idea is that we are not at a stage where we can say, you need to use this methodology because this is a standard. We are at the stage where we need more transparency. I mean, we need to keep the transparency because we already have a lot, but we need to have the transparency to spur the dialogue on this, to make sure that all the methodology they are disclosed, we can exchange, we can debate, and then we hope that we will converge toward standard methodologies for all the type of asset work that we're financing.
That's a really good point. And again, the transparency issue, we think that sovereign bond issuance, that's funding stimulus and dealing with the crisis, can use these provisions of the Green Bond Standard now as guidelines for how to report and to build confidence on the part of investors and the general public about the usage of those funds. Absolutely. Let's go for the transparency. Okay, we're coming to the end of our time, folks. I need to give you a chance to tell us, what have we missed? Is there something we haven't covered? But one question to throw at perhaps Aila Kreivi. We've got loans, even green retail products. Does the Green Bond Standard cover the loans? You know, we've got a green loan principles in the voluntary market at the moment. I mean, what's the product extension opportunity or issues here?
Well, maybe okay, you go ahead.
Well, yeah, go ahead. It's fine. I thought, yeah, you were saying Eila.
I mean, the history of the TEG is the confusion between Eila and Eila. So that's
this is the story of our lives.
Yes. That has been there for some time, and it seems to be difficult. Never mind. We are both from a bank, from a commercial and multilateral, so it's a little bit of the same picture, but I suppose we have a bit more retail. Yeah. Tanguy, of course, as well. So it is really the loans are the financial assets of banks. And so the loans, and there was also a question of SMEs, and I think it is a related question. So the loans to households through retail, the loans to SMEs, they are typically given out by a bank. Mm-hmm. Then we are branding them as green loans, and if we are considering to refinance those from the bond markets with a green bond standard aligned bond, we would need to use the taxonomy and the other criteria in the standard, then granting the loans. It could be challenging in some industries and relatively doable in some others. Real estate is manageable. There's a number of loans, of course, in question, and you may have to use some proxies to get the efficiencies right. But I think that is doable. So connecting these, the standards and expanding the relevance of the standards goes through banks' balance sheet is the short answer in a way, because otherwise we can't finance ourselves from the bond market using these unless the underlying assets fulfill the relevant criteria. And that is also relevant for the SME financing. Bonds are a sort of, they are a refinancing tool. It's a nature of bond, whether it's green or standard. And also from that point of view, there's a rather big minimum size for issuance, a little bit smaller in single currency markets like Swedish krona, mm-hmm. Bigger in euros. But still, it's this bank's role to intermediate here.
Okay.
Did I forget something, Eila?
No, I would have said pretty much the same thing. And I know that there have been sort of a smaller kind of SME or maybe this middle-sized corporates issuing green bonds, but they have been typically bought by one investor, so they are kind of a private placements done under bond documentation rather than loan documentation.
Yep.
But I think it's we have seen on our side, for example, that corporates who take loans from us in these sectors now that are covered under the taxonomy, that they are asking, can we not call this a green loan? So they also get sort of they're part of that greenness, and we have started to do this. And I think that's something. And I know that there are mortgage banks who are selling green mortgages, which they then package into covered bonds. So I think it's a product really that the banking sector will need to develop.
Fantastic. So it's interesting that there are other people wanting to embrace this green future. It's becoming a common theme across Europe. And of course, as we go into the stimulus period, we've already seen a lot of discussion about green stimulus. We need to ensure it's a green stimulus, but it's not just what the sovereigns do. It's what all of us do in this economy, in the society, to make sure that our activities, our enterprises, our businesses are aligned with the future we want to build for our children. And that has to be a climate resilient and a low carbon future. Now that's a global issue. There's been a few questions about this. Is this relevant everywhere? Yes, it is. In terms of taxonomy, I'll refer you to the webinars again, but in terms of the green bond standard, there are provisions in here which can be used everywhere. In ASEAN, the ASEAN Capital Markets Forum have developed guidelines and green bond principles which are remarkably close to what we've done in Europe, and we can expect to see some harmonization between the two in the coming years, and so on. But we need to finish up now. This has been a really great hour. Final thoughts for our stakeholders going forward. Perhaps I can start with Eila Kreivi at the European Investment Bank first. What's your advice to people out there about using this and about what to expect for the future of this market?
You asked such an existential question. No, I think I really signed everything you said there. We have to recover in green and in a green and sustainable manner, and that is really the core. It would be really stupid to do any other way, because now we have the chance. And also for everybody who puts any money out there in any support mechanism, be it private and public, of course, mostly public, should put some conditions in there which take this into account. So the future needs to be green. Build back better. That's the key. Build back better. Nicely said. Tanguy, the guru of green at Crédit Agricole. Parting thoughts.
Yeah, I think we've done a lot of things good in this. So it was the question. I think we have not seen the crisis of the COVID, and so in fact the tools that we have now, they are really good for green. we are not now. We don't have the tool to say that the stimulus, I mean, how the build back should be green or should not be brown. We don't have those tools, so we need to think about that. But I'm sure that we will all collectively manage to do that. My message is that in this market, it has always sped up to be environmentally ambitious, because at the end of the day, people, they all want to achieve this goal. They don't want to do just another bond. They want to do the bond that will change things, that will move the needle. So don't hesitate, all of you, and in the seats where you are, to be ambitious from an environmental standpoint.
We saw 258 billion issued in green bonds last year,
Yeah.
and more again in social and sustainability. DZ Bank put out a report last week saying they think they're still going to see 375 billion in 2020, despite the Q1 crash. Are you bullish, or are you more cautious than that?
We didn't update for the moment the prediction for this year. Clearly, the social part is taking over from the green side, but it's a bit. We will need to make prediction for the current COVID crisis, and that's not an easy bet.
Thank you. Eila, you've done so much work on pulling this together over the last 18 months, and you've been on roadshows. You and I have done a few of those around Scandinavia and Eastern Europe. What's your prognosis about this? This is a big strategy. Is it going to work? How quickly is it going to work? And can you see it being picked up in the recovery?
Well, I think that this is the start of a lifelong learning in a way. It's first of all recommended for all of us as individuals always. Mm-hmm. It's both motivating and a healthy activity as such. But as a financial community, we have embarked on a mission to start learning what it means to talk about environment and social aspects. We have a little bit maybe isolated ourselves from these issues, and now is the time to embrace them. It first looks a little bit difficult. Taxonomy and the standards are tools to help that learning process. And there's really no other way. We have to do this. We have to align what we do with our money with the outcome to ourselves, our children, and to the societies around us. I think it will be a long journey, but there will be some jumps where we accelerate the pace. And I hope that this is one of those times when we really take up and do our homework and issue green, or at least make sure that we are not issuing anything that is harmful, and take it from there. Don't give up. Go for the better.
Fantastic. Thank you very much, everyone on the call. You've heard three very committed, very talented, extraordinarily well-informed bankers on the call today, who've been working hard for 18 months in what is a public good for Europe and defining the right kind of future we need for our children, as I've said a couple of times. Thank you for joining us today. Thank you everyone on this conference call who are interested in this incredibly important task of developing a future. This webinar will be available on YouTube. It'll be available as a podcast. You'll be able to download it. The details are on the screen, but if you simply go to the Client Bonds website, you'll be able to drill down and find it. We will attempt to pick up a couple of the questions. There are a few that we haven't been able to ask. There will be a significant Q&A published from a technical expert group, taxonomy group soon, and we may even pick some up on the Green Bond Standard there. There's going to be a lot more communication about this over the rest of this year. We're determined to explain ourselves fully, and we're determined to continue to refine if we need to, if there are issues to address going forward. It's a dynamic situation. The key thing is an extraordinary commitment by, in the TEG, 30 of us plus 400 people involved in this process in creating a sustainable future, by the Commission, and continuing commitment by the Commission, by the European Investment Bank, now our Climate Bank, and by European citizens, to making the world a better place and to making it an inclusive one for all the other countries that are determined to create a future that's sustainable for us all. Over and out. Thank you, Eila, and Tanguy.
Thank you.
Thank you.
Bye-bye.
Bye.